Today, deposit bail-in, who's fact-checking the fact-checkers? Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Today, I'm joined by Robbie Barwick from the Citizens Party. Hi, Robbie.
Hi, Martin.
How are you going?
Yeah, good. Enjoying my favourite news service, Australian Associated Press. They're covering some good subjects lately, including bail-in. Fascinating article, worth talking about.
Yeah, I think we should talk about it. Look, I've had a lot of people phone me and contact me by email over the last 2 or 3 weeks, watching the the financial system under extreme stress at the moment, with interest rates going up, with stock markets going down, with Federal Reserve talking about putting rates up, and people are really getting quite concerned again about the stability of our banks and specifically how that relates to savings and bail-ins. So at one level, the fact that AAP decided to put the flag up and talk about bail-in was good, but I have to say that the fact-checking they did about it was, well, rather half-hearted, frankly.
Well, they have a fact-checking division, and if they don't lift their game, we might say that term more loosely and it might sound like something else. And so it's called AAP Fact Check. And I don't mind fact checkers. I think fact checkers are good, but they've got to know how to actually do their job, right? And one question I posed on Twitter about this fact check is, given they quote us extensively, the Citizens Party, because we've campaigned on this for so long, why didn't they talk to us? Get our explanation for why we are insistent that this is a danger, even though the government, certain legal professors, and now the fact checkers say it isn't, right? And that we could have given them some nuance, some deep background that might have given them a slightly different perspective. And because they didn't give us that opportunity to do that, though, we'll do it now.
Absolutely. And I think that's the important thing, right? Because this is quite a complicated issue at one level, although it's very, very simple at another level, or horribly simple actually at another level. And yet they managed to do the same sort of trickaroo that a lot of the politicians do, which is effectively spend a lot of time talking about $250,000 deposit insurance schemes, which are completely irrelevant when it comes to deposit bail-in, right? Yep. And then they basically did what everybody else is doing to say, well, of course it'll never happen because APRA says it will never happen and the RBA says that, and politicians say it'll never happen. But they failed to mention a couple of important things, like the mandate from on high internationally from the G20, the fact that it's also been implemented in a number of other countries around the world, including in New Zealand, where it's very transparently implemented, and the fact that underlying all of this is a big question about how stable our banks actually are.
And that final point makes you wonder about the timing of this, because the particular claim relates to our, and when I say our, your role in it, your viewers' role in it, Citizens Party, One Nation, Senator Malcolm Roberts, John Adams, etc. Your interest of the People's Channel. We had a big focus in 2020 on the Senate committee inquiry into the amendment that Senator Malcolm Roberts put up into the 2018 law that we say brought in the danger of bail-in for deposits. So that law was passed 4 years ago, and the inquiry was 18 months ago, and they're doing a fact check on this now. Why the sensitivity? And I can't help but think it relates to your opening statement. There is good reason for the sensitivity. The public's trust in any institutions, including the financial system, is at an all-time low, and the financial system is really, really rocky. And I think this is a patently obvious attempt to shore up support, but using words, not actions, and that's the problem. Use actions, and they'll get the support that they need. So here's the claim, the article, Martin. So the headline from AAP Fact Check, and the author was David Williams, claim that government can grab bank deposits in a crisis has no currency. So full marks for the clever headline. And the specific claim is the government can take any deposits in excess of $250,000 from your bank account, and instead you can receive shares in the bank. That's the claim, and their verdict is, or our verdict, the section says, false. The claim is based on opinions that have been investigated by a parliamentary committee and found to be unsupported. All right, well, let's go through what exactly happened. So apparently there's an influencer on the Gold Coast. So in fact, last year, someone sent me his video where he's doing the thing that we haven't yet got into, Martin. I think this is old technology, you realise. The modern way to communicate is you've got to be in your car with your mobile phone in front of you and rant and rave to the mobile phone as you're driving along or not. That part's optional, right? And that's how you get your message out nowadays. No fancy after edits and post-production stuff, etc. Just do it that way. So anyway, he did one of these typical things.
Or you could sing it on TikTok.
Well, that'd be even more effective, apparently. You'd get 10 million times the views and 1 millionth of the understanding.
That's about right. That's about the right return. And, you and I will continue to make serious programs about serious stuff, right? Rather than actually ranting and raving about it. Because, look, there's a real important issue here. This is not something which we should just laugh off or say, oh, fine, that means they've proved it, disproved it, carry on. This is still a very serious issue. Well, this was a sea change in the financial system post-2008. Investment bankers actually, colluding with central bankers, came up with this idea, how do we keep our financial system propped up? Let's put the public on the hook. Let's put households on the hook. You remember that, right? That was explicit. Yep. The cost must be borne by households because the financial system is not there to serve households. Households are there to support the financial system. Yeah, we are cannon fodder. No, exactly. Yeah. And this is the moral reason to oppose bail-in. But in Australia, they had to do it in a certain way. So this social media influencer, he made certain claims, including the one that they cited. I saw in his video last year that he said a bunch of other things that told me he didn't really know the subject, but he did quote our material at one stage, right? But I don't know what his particular motivation was, but that's the specific reason it's been picked up. But in going through those claims, frankly, they've found themselves severely wanting. Here's the reference to us. It says, entering in the video, he tells his followers to Google bail-in law 2018 Australia. So AAP did. Entering that phrase into a Google search brings up the first result of a link to a web page of fringe political organisation, the Australian Citizens Party. One thing you cannot accuse me of is being fringe. The web page refers to a piece of legislation, the Financial Sector Legislation Amendment Crisis Resolution Powers and Other Measures Bill 2017 that became law in March 2018. Then they criticise this social media influencer for saying they snuck in a new law, snuck it in the back door with some people voting it in awake and voting it in. The rest were asleep. Then they say, no, it was done in the middle of the day. Well, of course, it was. We've never said otherwise. What we have said is that it was done with 8 senators present in the chamber and no ringing of the bells for a formal division because the government, which was in charge of that, knew that they had told One Nation that they could put up an amendment, but One Nation was out of the room. And they did it that way so that One Nation didn't come into the room and move their amendment. And the amendment they would have moved in 2018 is the same amendment they tried to pass as a bill in 2020, right? This could have been dealt with much earlier. And all the amendment wanted to do was clarify this loophole. And the loophole created by these words, or any other instrument. In the context of the bill, they're talking about write-down provisions or cancellation and write-off provisions for unsecured creditors, right, which are the circumstances in which the bank's obligations conversion. The bank's obligations to its unsecured creditors can either be converted into shares or even written off. That's the section of the bill, and it names the 2 types of hybrid securities it applies to, and then it inserts these
words or any other instrument. And the problem is a deposit is a financial instrument. By any definition of the financial system, it's a financial instrument. Plus, depositors are also unsecured creditors, right? And that's the basis upon which we're very, very concerned. And they're trying to now explain that away. So here are the things that I want to put up, and some of them you've already mentioned, that balance out what they're trying to say. Because I'll just get to their conclusion first, right? The verdict. This is the overall the expanded verdict. The claims made by Hyombi, but that's the social media influencer, I probably haven't pronounced his name properly, reflect similar claims made by One Nation Senator Malcolm Roberts in submissions by minor political group, the Australian Citizens Party. The Senate committee investigated concerns that the 2018 legislation meant that bank deposits could be subjected to a bail-in and concluded that existing laws protect deposits. Experts in financial law have also dismissed the claims, describing them as confused and an extreme and strained reading of legislation that no Australian court would adopt. So that's their verdict. And let's go through that. First of all, the way they describe the claim, that the government can take any deposits. Well, no one's ever made that claim. Like you're talking to the experts in bail-in here. This was never said the government can take your deposits. That's not what a bail-in is, right? A bail-in, in fact, the people who cooked it up said government should have nothing to do with it.
Yep.
Because it's unlikely that in a crisis they'll want to do that because they'll be worried about getting re-elected after they did it, and no government will be re-elected after stealing people's money. So this is to be done independently by the regulator, which in this case is APRA, right? And it's not about taking deposits per se; it's converting them or writing them off. But anyway, the first point: it's not the government. This is a specific regulatory measure, and that's the way it was designed to be. And the head of APRA in Australia, Martin Wayne Byers, was the head of the Bank for International Settlements Committee on the conduct of regulators when this law was cooked up, and his committee for the Bank for International Settlements, which houses the Financial Stability Board that oversees bail-in laws, his committee says that the regulator should always be independent of the government, right? The government should never be able to tell it what to do. It's actually an extreme neoliberal position. So that's the first thing. The second thing is this. This is an international commitment. Kevin Rudd claims credit for talking George W. Bush in 2009 or 2008-9 to respond into the global financial crisis, not through the G7, but through the G20. And at the G20 conference in 2009, all the members of the G20, those 20 countries who are members of the G20, committed to letting the Financial Stability Board design a uniform response to a financial crisis like the global financial crisis. That's what they committed to. That was in 2009. In 2011, that Financial Stability Board, then headed by Mario Draghi, the current Prime Minister of Italy, but former Goldman Sachs banker, that Financial Stability Board laid out bail-in. It's called the Key Attributes of Effective Resolution Regimes. And the section on that on bail-in is explicit. This applies to unsecured creditors, i.e. depositors, right? And Australia, like every other member of the G20, signed off on it. Yep, tick. And the proof of that is how many times the Financial Stability Board has had to say in the 11 years since to all the members of the G20 who agreed to it, why haven't you passed it yet? This has been their recurring theme. They all agreed to it, right? And so Australia was one of those countries. Our government is committed to this in principle, and that includes deposits. And then look at they talk about it in Australia as if it's unthinkable. That the government's contribution to that Senate inquiry in 2020 basically said this is completely unthinkable. This would never happen. These legal experts at AAP cites this is unthinkable. Well, look around the world. Bail-ins have happened, starting in Cyprus 2013. Tell the poor people in minor banks in Italy and Spain who have been bailed in repeatedly that bail-in is unthinkable. They're always getting bailed in. And in fact, the Italians have got so sick of bail-in, the Italian government, because it doesn't direct it, the European Union is what directs it. the way it works in Italy is it's also above the guaranteed limit, right? Of, our guarantee is supposedly 250,000, theirs is 100,000 euros. And the way the bail-in works is when an institution's failing, they just grab all the depositors' money and they refund the secured amount or the insured amount, 100,000 euros, except the refund can take years. And so what the Italian government has started doing is when a bail-in is implemented, they'll refund straight away instead of waiting for the authorities to do it, and they refund double, right? And so the Italians have actually artificially raised the guarantee level in Italy differently to the rest of Europe because they're just so sick of it happening so many times. So don't tell me it's unthinkable. Plus, it's legal in the European Union, the UK, Japan, Canada, New Zealand, as we discussed, and the United States. These are the countries that are closest to Australia, have the most similar financial systems. And our government claims that this is an unthinkable thing.
Yeah, and by the way, John Adams and I did a show some time ago on IOTP that made the point in Australia in 1890-something or wherever it was, there was a deposit bail-in done here in Australia, and probably one of the first ones in the world. So, it's been done before.
Well, that's the point. The logic of bankers is lose some or you'll lose all, right? Now, there is a logic to that. I accept that. Our argument that the Citizens Party has made all along is, hang on, before you tell the people lose some or you'll lose all, force the banks to change their ways to stop them getting into trouble in the first place, right? And in the 1890s, it was a property bubble. Now it's a property bubble combined with derivatives, and that's all encouraged. So the most reckless behavior that puts deposits at risk is encouraged, and they're not even thinking about changing that behavior, right? No, you keep gambling, boys. We're going to put your customers on the hook, and that's the immoral side of it. So yeah, it's the thinking. Actually, one of my big discoveries in the financial system, I remember reading, having learned about derivatives and whatever, and then reading a detailed account of the 1929 stock market crash. And my biggest takeaway was, man, there is nothing new under the sun. They had all sorts of clever financial engineering going on there, and it just comes down like a house of cards. Now, so they go and look at the committee report from 2020. The AOP go and look at the committee report from 2020 in response to Senator Malcolm Roberts' bill. And remember, Malcolm Roberts' bill was very simple. All it did was add to the words or any other instrument, explicitly excluding deposits, and then inserted a definition of what deposits actually are to be the broadest possible definition so that there could be no funny buggers, later on to say, that definition didn't cover this, so we can cover it. That's what Senator Malcolm Roberts' bill did. And the argument for the bill is, we never tried to say the 2018 bill absolutely explicitly is a bail-in law. What we said is it contains a loophole. You, the government, say it would never be used to bail in deposits. Well, the problem is the loophole doesn't give people any confidence, people who know about it. So you say it won't be used to bail in deposits. Let's just insert the tiniest of amendments so that in legislation it says exactly what you say in writing to your constituents. Any problem with that? And it turned out there was a huge problem with that. And the question was why. And now I want to cite two names from that 2020 committee inquiry, because two names came out of the woodwork and it was quite extraordinary. One of them was Dr. John Hewson, former opposition leader Liberal Party. He commented on the amendment and what it was trying to do. And he said, it's a no-brainer that this should be passed, right? There's no problem here. All it does is clarify. He understood, it just clarified the law. So the law says exactly what the government claimed. Well, that's a no-brainer. And win-win, because the ultimate outcome is more confidence in the financial system. So he said that. The other person who came forward was the former director of the Australian Banking Association. And this gentleman, I have to confess his name escapes me right now, had also been a former advisor to John Howard when he was Prime Minister, and to Alexander Downer. So a former advisor to two of the most senior politicians in Australia when they were senior politicians, and former director of the Australian Banking Association. And he agreed with us that the law was ambiguous, that it did allow doubt. But then he dropped a bombshell because he said the law absolutely should be clarified in the other way to make sure deposits could be bailed in. So here's a banker came out of the woodwork to, one, confirm we were right to be concerned about the bill, but actually confirm no, bankers want bail-in, right? It was an extraordinary intervention in that committee report. But unfortunately, this particular committee is run by the government, and the committee report just served the government's purpose. And these are never objective exercises, right? So we're not complaining about that. We know how it works, but we're not silly enough to, like AAP, to say, oh, see, a committee said this, it must be true. No, they just stuck with the government's line. And remember, Scott Morrison was the Prime Minister, is the Prime Minister now. He was the Treasurer when he pushed bail-in through, right? So that's what you need to know about that committee. But then I just want to take issue with the comments, Martin, of these legal experts that AAP consulted with, right? So two of them cited the $250,000 deposit guarantee as a protection against bail-in. And of course, our big issue was, you got to look at the details, guys. That isn't a protection. First one, the first point about it was it's unfunded. The second point is it's unactivated, and that's listed on, that's declared on the website that the financial claims scheme, the $250,000 guarantee, is unactivated. It's only activated when the bank collapses, and then even then it's at the Treasurer's discretion. So it's not like your insurance that you buy, that you pay premiums for, that covers you now. Whatever you do, your car, your house, or whatever, you're covered by insurance now, right? You don't have to. That kicks in straight away. Like you can go through the process straight away if something goes wrong. In this case, before the so-called insurance of your deposits is honoured, the government has to decide whether they're going to first. And the fact that there's discretion, we have that from Scott Morrison in writing. It's up to the discretion of the government to decide that. That's why the fact that they say it's not activated is so important, right? It's not the guarantee people think it is. And then finally, given that, it can't apply to a bail-in, because as I think you and John did a show on this as well, the whole purpose of bail-in is to intervene before a bank fails. No. Right? This is not a difficult point, but they don't want to acknowledge it. And I think it's a whole ball of wax, because if they actually really start talking about how the financial claims scheme would work in practice, I can't imagine them not spooking the markets, to be honest.
No, well, that's right. And it's interesting because a number of people over the years have written to their MPs about deposit bail-in, right? And they always get the boilerplate standard response, which I guess ultimately emanates out of Treasury, which basically defaults to talking about the 250,000 deposit guarantee scheme, right? So in other words, they deflect from the bail-in to the deposit scheme, right? And say, well, no, it's nothing to worry about because we've got the deposit scheme. So they don't actually answer the question with regard to the deposit bail. And the other thing about the deposit scheme, of course, is that there's an implicit assumption it's only up to $20 billion per financial institution, right? Which is not going to be enough to cover all the deposits in a particular bank if it was ever activated, right?
And both the Financial Stability Board and the Council of Financial Regulators have said, the CFR in 2009 and the Financial Stability Board in 2011, that the $20 billion provision for the financial claims scheme in Australia is not enough to cover deposits in the big four banks.
Yep.
And that's 80% of deposits.
Yep, correct.
I think the whole thing's a bluff. I mean, we didn't have a deposit guarantee until 2008 anyway.
Yeah.
Right, and they claimed everything was guaranteed. Then they pegged it back to eventually to $250,000. But that was just to stop people from pulling their money out of the bank.
Yep.
right? And I think they prefer to have it as a bluff rather than actually something that's guaranteed. Here's what I reckon is the most revealing comment by one of the legal experts, though. University of New South Wales Scientia Professor Ross Philip Buckley from the Faculty of Law and Justice told AAP Fact Check that the Australian government could not order the conversion of people's bank deposits into shares. Quote, an extreme and strained reading of a phrase in the Financial Sector Legislation Amendment Bill could lead to that result, but it is not a reading any Australian court would adopt. Now, so there's two things about the way he chose to say that. We're looking for an absolute guarantee that bail-in could never happen. That's what we're looking for. That's the basis upon which we tried to amend this bill. An absolute guarantee, right? He is saying that, even though he's saying it's an extreme and strained reading, that the bill, he's confirming the bill does not provide an absolute guarantee. It could be, in an extreme and strained way, interpreted that way. That's what he's actually acknowledging. And that's our fear, because nobody thought of bail-in until the biggest financial crisis in our lifetimes, right? And when the crisis happens, my abiding image of the 2008 GFC was Hank Paulson getting down on his knee to Nancy Pelosi, begging for a bailout for Wall Street. And under those kind of circumstances, because the politicians didn't want to bail out Wall Street, there was a big revolt in the Democratic Party. What the hell are we doing? These bastards, the cruelest people in the country, right? The beneficiary of the most extreme inequality in the world, right? Who love nothing more than running home with their massive paydays and to their mansions in the Hamptons, etc., and stuff the poor, stuff everybody else. They're in trouble and they got their hand out? No way. There's a big, it's called the Black Caucus in the American Congress. These people, they represent genuinely poor areas. You can imagine. It was a huge backlash. No way. We're not going to bail you bastards out. But then they're told, if you don't do this, the whole thing comes down, right? Samson pulls down the temple on top of us all. It's all gone. Your decision now will either destroy the global economy or save it. And under those circumstances, people agree to all sorts of things. They are, let me describe those circumstances as extreme and strained, right? And our worry, Martin, is that under such circumstances where Australia's, if interest rates go up because of inflation, the property market starts to tank in Australia, which has been the cornerstone of our economy for way too long. There should never have been this bubble. But that starts to tank. Panic sets in. The derivatives exposure of our banks starts to unravel. But that derivatives exposure is not just in Australia; it's right around the world. In fact, most of it is with banks around the world. And the IMF said in 2011 that Australia's not, while one Australian bank on its own is not globally systemically important, i.e., is not capable of bringing down the financial system, the Australian financial system as a whole is capable of bringing down the global financial system. So under those circumstances, if the head of the RBA and the head of APRA go to the government and say, this has to happen because we're getting calls from the Bank for International Settlements and the Financial Stability Board and the Bank of England and the Fed, etc. You've got to put a tourniquet on this. You have to take the deposits of the Australian people to stop their banks collapsing so that this doesn't trigger global contagion around the world. Under those circumstances, and given that the politicians are brainwashed to think that the regulator should be independent anyway, under those circumstances, the regulator would, in a heartbeat, bail in deposits, right? And politicians may complain, but I doubt they'd stop them, right? And that's what we're worried about. And that's why we wanted to clarify the bill, because it is possible. Extreme and strained reading could make that happen. And then the other point is, he backed that up by saying, one of the reasons that it can't happen, or this other professor, Will Bateman, he said, he added this. Australia also has constitutional protections that prevent the government from acquiring property, including deposited accounts without providing just terms or compensation under Section 51 of the Constitution. Now, I think that is the height of ignorance, because deposit accounts are not normal property. They are, as we discussed, depositors are unsecured creditors.
Yep.
You are a lender to that institution. You're talking about a default. A bail-in is a legal default. It's the authority saying to the institution, you can default on part of your obligations to those creditors. That's not the same as confiscating property. This whole idea of the government can take your deposits. We've never said that. That's not how bail-in works. These people have addressed a non-issue.
Yep.
And AAP has concluded based on that. So that's not going to fill anyone with any confidence in the system. I hope it fills people with confidence in our understanding of this issue. And it's why we have to keep the pressure on to amend this bill. If you've got to the end of this discussion, and you're alarmed like us and want to do something about it, one thing I can suggest you do is get in touch with Senator Malcolm Roberts' office and tell them, because they take the lead on this, tell them they have your support to put up their amendment again. Keep putting it up. Let's make sure this debate doesn't go away. The amendment settles the whole thing, right? Call Senator Malcolm Roberts and say, listen, we know you've got an amendment. We're right behind you. We want this thing clarified as well. And they will respond to that public support, right, and keep fighting on it. That's the best way we can take this issue head on, not by denial like AAP is doing, but by actually fixing it. The solution's right there. And all it does is put in writing what the government says verbally, right? Not a big deal. And in fact, as John Houston said, it's a no-brainer.
Absolutely, Robbie. Well, it's important that people understand that, this is a real important issue. There is a way forward, as you've outlined there. And unfortunately, we've had to, fact check the fact checkers on this one, because they did half a story rather than the full story. So I think we've covered that ground very nicely. And if people want more information, we've made a few shows previously on this, which I'll put some links and things below, because there's a bunch of other things we could talk about. New Zealand in more detail. We could talk about what the IMF said, etc. But the point is, there is a half open door to allow the regulator to come in extremis, and that could be closed very simply, very straightforwardly. And as John Houston said, it's a no-brainer. So the question you've got to ask yourself is, why wouldn't MPs pass it?
Yep. And the answer to that question relates to the power of a certain banking lobby in Australia. Absolutely. Which we've got in our sights.
Exactly.
Yeah, Robbie, get on to Malcolm Roberts. He's like, he has a solution there. He knows it. He's fully committed to it. Yep. It's just he'll listen to the public's call and keep pushing it into the Parliament.
Great. Well, thanks for your time today. Appreciate it. And we'll keep everybody updated as things progress, eh?
Thanks, Martin.
Thanks. Take care.